Okay. So reverse mortgages do have a rough reputation, and that is because it was always a government program. It was developed to help our seniors age in place. But over the years of working in that program, there were some unintended consequences that occurred over time. And so in 2015 and 16 and 17, the program was re-regulated. So it is a government program, it is an FHA program. And now some of the challenges that people had before are really gone. So I would say 80% of the things that people think about reverse mortgages are just not the case. If you have ever heard of someone out there who's had is having trouble with a reverse mortgage, please feel free to connect me. I'm happy to help someone who's dealing with, the end of a senior's life and is trying to figure out how to navigate that. It is a little bit of work, but it is the program is very protective of seniors. A lot of people think they're going to get taken advantage of, and it's really almost impossible at this point. One of the very first things with reverse mortgages now is that before a client can do anything with me, they have to go to a third-party counseling class. So the way it works is that I'll talk to a client, I'll determine if I think there's a need. The client and I will go through whether it makes sense to move forward or not. And then the first thing they have to do is they have to go to a third-party counselor. They pay a fee to the counselor, and the counselor goes through everything with them and makes sure they understand everything, make sure that they're competent, and make sure that there's no confusion. That helps me. I never have to worry that the client didn't misunderstand. A lot of times I will encourage heirs to be on that call with the senior, because sometimes the only people who get really nervous about reverse mortgages are the heirs, because they're potentially worried that it's going to eat into their inheritance. And so, we talk through all that with people. As I'm working with clients, I talk with the heirs. Lots of times it's the client them who bring me the problem, right? Sometimes a senior is not even not competent anymore, but they want that senior to be able to age in place, to stay at home and have home care. So they're using their power of attorney with me to help the senior get into a reverse mortgage so that they can get the money to do in-home care and to reduce that stress. And like I said, it's very satisfying when it's over, because they're very grateful people. I work really hard to make sure everybody understands everything so that there isn't any confusion. And I do it from an educational perspective. I'm never selling a reverse mortgage to anybody. I'm just explaining how the program works. It's either the right thing for them to do or it's not. So I am going to share my screen. Excellent. Okay, so let's talk about reverse mortgages and what I call the 5 nevers of reverse mortgages. Homeowners never give up the title to their home. So one of the things people think is that you're signing away your home, and then when you die, they get your home, or that at some point they can take your home away from you. That is not the case. A reverse mortgage is just a mortgage. It gets recorded on title, and it's just like any other mortgage. You can pay it off, whatever the balance is. You can sell the home and pay it off and keep the proceeds. The government doesn't have any ownership in your home. They just have a mortgage. It's a non-recourse loan, so you never own, neither the senior or the heirs can ever become after for any of the costs. So at the end, if something crazy happens to the market and the market takes a huge dive, then when the senior is done in their home and they move out into some other home or they pass away, if for some reason the values have dropped dramatically, then they can just turn the keys over to the servicer and they don't have to think about it. Nobody's ever able to come after them for the balance on the mortgage. You're never going to have to leave the home because the home is upside down in value. They're designed so that you won't ever be upside down in value. But if we had another great recession or something where the market took a crazy hit, it's possible. In that particular case, you are allowed to live in your home until you no longer live there for 6 to 12 months or you pass away. Otherwise, no one can ever make you leave your home as long as you're taking care of the home and you pay your taxes and your insurance. You are never required to make any loan payments ever. You just have to pay your taxes and insurance, but you can choose to make mortgage payments. So it's really just a very flexible mortgage. If the senior, basically every month they don't make a payment, there's an interest that's charged on any balance of the mortgage. And so that interest is added to the balance of the mortgage. So if a senior didn't want the balance of the mortgage to grow, they just wanted a reverse mortgage for peace of mind, then they could make that interest only payment and not have the balance grow every month. Then when they went to sell the home, or lots of times a relative will want to refinance the home into their name and they'll pay off the reverse mortgage with a refinance. Any of those options are there, but if the senior continues to make payments, that would just reduce the amount of cost that is added to the balance of the mortgage. As long as either spouse lives in the home, no, you won't be forced to leave as long as the house is maintained. So one of the things that used to happen back before it became regulated is that they would do a loan in one person's name. And then, lots of times it was the gentleman who would be older, the wife would be 10 years younger. They would live in a house with a reverse mortgage for 20 years and not have any expenses associated with that. Well, then what happens is he passes away, she's not protected, and now the wife hasn't had a mortgage payment for 20 years. Her Social Security, she loses her Social Security, she gets his, but still the household has reduced the amount of Social Security income they're getting. And now she has to try to refinance or sell the house. And so lots of times wives were getting evicted. So now there's an absolute rule, no matter what, you have to cover both spouses in a home when you do a reverse mortgage so that both spouses can live there and as long as one of them is alive. And feel free to throw questions into chat if you have any. So the big thing is that seniors are terrified of running out of money. They're more afraid of running out of money than they are about dying. And they don't want to tell anybody, especially their children. This generation is the first generation that is retiring without pensions. The middle class of the last generation, they had pensions when they retired and they had Social Security. Well, this generation just has Social Security. There are 50% of people in the country own their house free and clear, but there are tons and tons and tons of people who are retiring and only getting Social Security. And if you're somebody who took Social Security when you were 62, when you were eligible, you might get $1,200 in Social Security or $1,400 in Social Security. That is not even if your house is paid off, that is not a comfortable place to be. And so it is in those situations where people are not sitting on a couple of $1 million in additional assets that the reverse mortgage can be used to decrease the stress of retirement. But we have way more people out there. Somebody owns a $350,000 house. They owe $100,000 on the mortgage. They are getting $1,700 in Social Security. By the time they pay their mortgage, they don't have food. They don't have money for dog food. And so they're living in very uncomfortable lives and stressed out all the time. And they work their whole lives to pay off their house. So this entire program is best used to decrease the stress that seniors have in retirement. All right. So let's talk about the downside first. What is the reason you wouldn't do a reverse mortgage? So the closing costs are the biggest thing with reverse mortgages. So if you were going to move in a year or two, you wouldn't do a reverse mortgage. If you weren't someone who wanted to retire in your home, you wouldn't do a reverse mortgage. Also, if you are someone who, like, you have a child who is special needs and is going to need care after you leave, they're going to need a house to live in after you leave, that would be another reason not to do a reverse mortgage. But the closing costs are paid by the house, right? So it's not like you write a check for the closing costs. What you're doing is you're basically buying the insurance that the reverse mortgage gives you, which is the ability to live in that house for as long as you live, if you live to be 105 or if you live to be 76. It's a little bit like if you bought an annuity and you said, I'm going to get this money for the rest of my life, you would pay an insurance premium to the annuity company to protect the insurance company if you lived 105 years versus if you lived 92 years. That is kind of what you're doing with reverse mortgages. So you pay 2%, the house pays 2% of the appraised value to FHA in a funding fee. That funding fee is then put into the insurance bucket for FHA to ensure that if there are losses from a reverse mortgage, there's that funding fee bucket to take the money from to fix the problem. And that's what ensures that the U.S. Taxpayers have never paid $1 to support the reverse mortgage program, and it's because of that 2% funding fee. So again, it's part of your equity. It's not a small thing, but it is just one of those things. It's either the right thing to do for you or it's not. There are also other closing costs for a reverse mortgage that, again, the house pays from the line of credit that you would get. And those are just normal closing costs, like attorney's fees, origination fee, intangibles tax. And so that is the only downside. The downside is that your house is going to start with a balance of, maybe $20,000 that's going to come from the funding fee at closing costs. And that's going to be the balance of your mortgage when you start and before you start taking off your stuff. So we make sure everybody understands that. If that's difficult for them, if that isn't worth the power of the reverse mortgage, then we don't do it. We just want to be straight up with everybody. So I thought I'd tell you about some clients. So my favorite client of all time is a reverse mortgage client. He was a VA vet. He was a veteran who was come to me. He had a first mortgage and a second mortgage that between those two payments, it was more than his Social Security payment. His mortgage payments were $1,410 and his Social Security payment was $1,360. He was 76 years old. He had a judgment from Bank of America for $25,000, so he was afraid to put money in the bank. He had bonded his 65-year-old son out of jail, and his son had never done the community service, so he had a $19,000 bail bond on his title. He had no running water because he could, even though he was a pipe machinist, he couldn't afford the equipment to dig up the front yard. His roof was original and it was a disaster. And he wasn't able to, he basically borrowed money from everybody in his family at that point. Nobody would talk to him or help him at all. So somebody brought him to me because he was a veteran, and we solved his problems with a reverse mortgage. And it was the most fun I ever had on a transaction in my life. He also had not been to the doctor or the dentist in 3 years because he couldn't afford the small co-pays to make that happen. So he was a mess. He wouldn't look me in the eye when I first met him. And it was a great joy to be a part of helping him. So, and anybody who's been to my VA class has heard this story, but, so what did we do? We did a reverse mortgage. We paid off the first and the second mortgages. We raised some money to help him catch up the second mortgage so that we had time to do the reverse mortgage. All of my real estate agent friends out there helped me put that money together. We raised money in like 9 hours to do what we had to do to help him. We hired a bail bondsman. If you ever need a badass bail bondsman in Georgia, I have a female badass bail bondsman I can introduce you to. We had her pick up the son and take him to the county, and then they released everything and we got the bond released. And of course they released the son too. It was just his son was just being a jerk to not just go deal with the paperwork. We were able to rent the piece of equipment he needed to get the running water done. A veteran roofing company replaced the roof for free, and then DuPont donated the shingles. And this deal I closed about 3 years ago, and he calls me every year, writes me letters, and I talked to him a few months ago, and he's still working a full-time job, happy as he could be because he's independent and can make his own decisions. It's just really a completely different human, and there's nothing more satisfying than making a difference like that. All right, let's talk about Mrs. Swan. Mrs. Swan was a client we helped a few months ago. She lost her husband about a year ago when he passed away.
Palazzo. C.
Prior to them,
Colazo with a C.
Checking out?
Yes, ma'am.
can y'all get on mute for me, please, Bobby? So Mr. Swan, Mrs. Swan, her husband passed away. Well, what happens when you have one spouse pass away? The other spouse gets the higher of the two Social Security. So the husband was getting like $1,800 and she was getting $800. So she gets the husband's $1,800, but she loses her Social Security. So the household is getting 30% less income. And, you know, they still have the same household to run, even though her husband's not there anymore. She owned a $400,000 house free and clear. When he passed away, she had $15,000 left after her final expenses. But she needed to replace the roof and an AC unit urgently. And she had $20,000 in credit card debt. And she was at a place where she couldn't make the monthly payments anymore. So the person who referred me to her was a bankruptcy attorney, because she had gone to the bankruptcy attorney to declare bankruptcy. Well, the problem with that is she has a $400,000 house. So she can't, these people who owe money aren't going to not take their money because she has an asset that they can lien. And so the bankruptcy attorney sent her to me, and we were able to help this lady out. And she was so grateful. Additionally, I always try to deal with the heirs, as we talked about. Her daughter has stage 4 cancer. So she didn't want to bother her daughter. She didn't want to get her daughter and understand. She didn't want her daughter to know how stressed out she was financially. And she was estranged from her son. I won't tell you what she said about her son, but I don't think she much cared what he thought. And so we were able to get her $150,000 line of credit. She was able to pay off her current bills, do this roof, do the AC unit. And now she's got a line of credit that forever, whenever she needs something, she can write a check. But if she doesn't need something, she doesn't need to increase the balance. So she's thereby protecting the equity in the home. Now you can see if she had a $400,000 home, we're only getting her $150,000 or $200,000 line of credit, depending on her age. So we're not giving away we're not using all the equity in her home to do the reverse mortgage. It's designed so that as the house increases in value and the mortgage balance increases in value, that the house value increase should outweigh any additional added mortgage balance that happens from accrued interest over time. All right, Mrs. Carter. We closed this client this week. She owns a $350,000 home. She owed $100,000 on the mortgage, and she was getting $2,430 a month in Social Security. Her $1,100 mortgage payment was killing her. So we did a reverse mortgage. We paid off the first mortgage. Now she has an equity line of $35,000 she can access if she ever wants it to. And she is super happy, super happy. She was sent to me by one of my agents. Mr. Rosario is an 80-year-old client we're working with right now. He owns a 600K home free and clear. And he has an equity line of credit. Well, free and clear except for a $20,000 equity line of credit. So the payment on that equity line of credit went from $150 a month to $300 a month because interest rates went up. And now he's in default. He's in default $1,000 on his equity line. Now this man owns a $600,000 house free and clear. And he's just got Parkinson's diagnosis. Should he be so super stressed out right now because he's behind on his equity line of credit? Like, is he going to have to move to pay? Of course, his credit is messed up now because he hasn't made his payments. And he clearly doesn't have enough income to offset to get a normal mortgage. A reverse mortgage is a complete lifesaver for him. It will make the last 10, 20 years of his life significantly less stressful. He's super worried about making sure he protects as much equity for his sons as possible. But he can do that by controlling how much he borrows. But having the flexibility to write a check is very important to him. And technically, the mortgage company could foreclose. All right, I'm almost done. So that's kind of one set of clients. I would say 75% of my clients are ones that are just super stressed out in retirement, but they have a lot of home equity. They are house poor or house rich, whatever poor, I don't know how that works. Anyway, The other 25% of clients are people who use it as a financial planning tool. If you or someone you know wants to consider a reverse mortgage for a financial planning tool, we can have a really good conversation about that. I can send you a book written by Wade Pfau, who really explains all the nuances and the actual technical numbers of what you can do with a reverse mortgage to help you have a better retirement. If traditionally, as a rule, if you have more than $2 million when you retire, then a reverse mortgage there's no point in a reverse mortgage in your picture. But if you have less than that, but you have a lot of home equity, then it might be that we use a reverse mortgage. We just put it together for you, and then we only use it if we need it. So there's a couple of reasons you might do that. For one, let's say you retire at 62, but you're not. It's way better if you wait to take Social Security in general. Like if you take Social Security at 62, it might be $1,100, $1,200. If you wait till you're 70, it might be $4,000 a month. So so it might make a ton of sense to create an environment where you have a line of credit you could use that would allow you to push off taking Social Security. Lots of times people are working even. And so that's a good, so they have that, they're working, they're pushing off Social Security, and then they have the equity line there if they ever need anything. One of the things is Roth conversion. Sometimes it's a good year to convert a 401k or an IRA into a Roth IRA. We have had clients who used assets from their reverse mortgage to pay for the taxes on a Roth conversion, and that allowed them to have tax-free money that they could access in retirement. Sometimes clients will use it for long-term care insurance premiums or life insurance premiums. And then the other thing is, if you think about when you take money out of your home or your retirement assets, if you have $300,000 in retirement assets, and last year when the market crashed, or one of the many times in the last few years the market's crashed, if you have to sell your money after the crash, if you have to sell your assets for your money after the crash, you are eating up a lot of your seed corn. Because all those predictions about how you can take 4% out a year and never hurt your principal assumes that everything is going flat line. But when you have to sell on a really bad dip, that can destroy your assets really quickly. And so a reverse mortgage can just be a tool that I work with your financial planner with, where when those bumps happen, when we have troughs in your market, we say, oh, we're not going to sell anything for the next 6 months. We're going to use reverse mortgage funds to fund everything so that we don't sell low. And also taking money out of the reverse mortgage is a taxable event. And so sometimes we do that to do tax planning. So those are all, I love that stuff. I'm a big old dork on that stuff. If you ever want to have further conversations about it, let me know. I love to talk to financial planners about it. Again, reverse mortgages have a bad reputation, but the financial planners who can get past that can really help their clients. So who is eligible for a reverse mortgage? A spouse has to be 62, one spouse has to be at least 62 and a half, and you need at least 50%, about 50% equity in your home or more in order to be eligible for a reverse mortgage. Reverse mortgages are not based on good credit and not necessarily based on income in the same way. We do look at those things, but we do reverse mortgages for people with really poor credit. There's just different way that we do it. We have to make different allowances. If I've got a client who's got really poor credit, then I'm going to do a taxes and insurance reserve for the client so that we pay the taxes and the insurance out of the reverse mortgage instead of depending on the client to do that. So it's a ton more flexible for our seniors because you think that you're going to be able to get money, borrow money based on your credit or whatever when you're older, but it's really based on your income. So if you don't have the income, it makes it very difficult for you to qualify. So reverse mortgages understand that and have much more nuanced responses. And then the last thing that I will say is that reverse mortgages can be used to buy a home. So if a client is wants to buy a $400,000 house with cash, but the house that they really want, that's near the grandkids, is $600,000. Well, they could come and put $400,000 on a $600,000 home and have a reverse mortgage for the remainder of the down payment. And that would allow them to live in the home without having any payments, and not have the stress, and not have to make a bunch of sacrifices in the choice of home in their seniors. They worked all their lives. They want to be near the darn grandkids. You know, why make them travel 45 minutes because that's what they have to do to be able to afford a house that they can pay for cash. This is just an avenue to let them retire happily and allow them to have a more flexible lifestyle. And then, like, we do that sometimes where we'll do a reverse mortgage as a purchase to buy, and we'll do that because the house over here isn't sold. Well, if we sell that house and then there's more money, then you can pay down the reverse mortgage and owe almost nothing on the reverse mortgage. And then you just have a huge equity line that you would have access to do whatever you want in retirement. So, okay, let me know if you have any questions, but I promised they'd be less than 30 minutes and we're right there. So thank you very much for joining us. We will make sure to get you the recording, and we will talk to you soon.
Thank you.